Hello, everyone. My guest today is Sebastian Carlson. He's a go-to-market specialist within vertical SaaS or B2B. As partner in Serendipity, one of Sweden's most well-renowned private incubators, he's worked and implemented a number of go-to strategies for SaaS companies. He likes to work close to customers' revenue streams and where there's high ACV. Today, he's focused on a company called Homemaker.io. Sebastian, are you ready to take us to the top?
Yes, we are.
All right, good. What does Homemaker do, and how do you guys make money?
We make money by selling our product to project developers. So real estate developers is our main customer, and we focus on getting closer and closer to the heart of our customers' business. So we have 4 different modules today. We can sell all the modules standalone. We have one for helping our customers with creating more leads when they sell apartments. We have one that creates value when they get new revenue streams, digital revenue streams from add-ons when they have bought an apartment. And we also have one module that takes care of the guarantee after they have moved in. And also we're looking into the renovation. So we have customer in all of these segments, and we think we might also going for the CRM, focusing a lot on the real estate business.
Well, help me understand how a CRM in real estate would be valuable. You know, someone buys a home and that lead in your CRM might not be valuable again for another 5, 6, 10 years when they want to buy another house.
Yeah, valid point. But we're looking for and also want to create or at least talk about I mean the product developers, to create new revenue streams, because they don't really focus on the one who's buying the apartment as a customer, but they still have a lot of customers that they could actually get to sell more services to.
Like what?
You can sell furniture, you can sell renovation opportunities, you could sell food. Amazon need places to get into the apartments or the housing associations. There are multiple opportunities, but we have just scratched the surface for this business.
Okay, so brokers are the ones paying you for these many different modules. Which module is your most popular right now in terms of revenue?
It's actually Homemaker Service, which is the most boring one. It's just for taking care of the errands and the guarantee errands when something is broke. And it's not the brokers that pays us, it's the product developers.
Okay, so the project developer.
Yeah, exactly. The one who is building the
developer.
Yeah, exactly.
And you said your main revenue stream is the Homemaker Service. So is this not a SaaS company? It's actually it's different. It's just a service company.
No. Everything is SaaS. So the service, the guarantee, it's like a complex fresh desk. Our SaaS solution. So we are selling this B2B again, but of course we are including the consumer in this here. So we are just a software as a service company, taking away all our consultancy streams as much as we can.
And when you look at kind of what the average developer might pay you per month or per year, give me an average. I'm sure you have a bunch of different price points, but what's the average?
Yeah, I think we're around $15,000 per year per customer, approximately. And we have quite a good net revenue retention with our customers, because we have, as I said, 4 standalone products that we can sell throughout the circle or process. So
Sebastian, what's good there?
What's good? I think we should go up to around $20,000 to $25,000 per year for the type of our TAM is so small, so we need to hire the annual contract value, of course.
So when you look at the cohort of developers you signed up exactly a year ago in October 2017, those signups can either expand and go up to $30,000 ACVs, or they can also contract or churn totally. So when you look at your net revenue retention, what is that?
Around 160%.
116 or 160?
No, 116.
116. That's pretty healthy, though.
Yeah, and we have just taken in some capital in form of round 2. It's a revenue-based loans, which is quite new here in Sweden, and we just took that money and putting it into R&D for us to take a bigger share of wallet from our customers, because there are so many analog processes today in this business that we can digitize so much more. So I think our NRR will be a key KPI for us to improve our business.
Well, and how many developers are you working with today in terms of ones that are paying?
We have 45 customers today.
Okay.
And most of them is project developers, but we also have some construction companies who is buying our product.
Okay, so 45 of these folks paying $15,000 ACVs, or about $1,200 per month. That puts you about 56 grand per month right now in terms of revenue. Is that right?
Yeah, your math is good.
Okay, or about 700 grand in annual. So the reason I ask that is because typically these revenue-based loans, you have to hit a minimum MRR before they'll kind of talk to you. So which firm did you decide to work with for that revenue-based financing?
Round 2 Capital.
Round 2
Capital, yeah. So they are based in Austria, but they are the founders has a history of Sweden, and also we have a good relationship throughout the history with the Serendipity, who's the incubator behind Homemaker as well.
Interesting. Okay, so these revenue-based financing things can take a bunch of different kind of terms and angles. Typically, there is some form of repayment cap. Usually, it's like 1.3 to 1.8 over like 3 to 5-ish years, and then you're paying back as a percentage of gross receipts each month, usually between, call it 3% and like 9%. Can you kind of dial in the terms for us? What'd you agree to?
I think you were quite spot on. I will not say exactly what our terms are, but you are really in the range where we pay.
Okay.
But we finance that because we have. If you look in what will the range be for price index rates per year, we are actually paying our mortgage or the interest with our price index raise every year.
Wait, sorry, you're pricing, Sebastian, I don't understand that. Sorry, you're paying it with your what? Your what index?
Price index. We always raise the price index every year for our customers.
Oh, so price index is your way of saying just what your price point is.
Yeah, I know exactly. So if we take, for example, $1,000 per month in 1 year, and then the following year, because we have quite long contracts, so they even when they extend or have a longer contract, every year we raise them by X%. I will not go in exactly how much the percentage is, but
it's more than what you're saying though. Is it's more than the interest rate?
Yeah, of course.
I see. Interesting. Are those the natural accelerators built into your pricing plan? Are those built into the contracts up front, or do you renegotiate those every 12 months?
No, they're built into the contract.
That's great. So each contract is how many years typically?
We have quite long contracts. Now I think we have an average contract length of around 24 months.
Okay.
But some are longer actually.
That's great. Now, and they're not always paying those all up front, but what you're saying is every 12 months you have like a natural 5 or maybe 10% accelerator in terms of, increasing price.
Exactly.
Interesting. Okay, very cool. And give me a general sense. I won't push harder on the exact terms on your loan, but I am curious. Like, did you go more for?
Sorry, Nathan, I lost a little bit.
That's okay, Sebastian. I was gonna say I'm not gonna push too much harder on getting your terms of what you got from round 2, but I am curious. Did you go for a longer repayment time frame of, call it 5 years and a higher repayment cap, or did you get a shorter kind of payback period and a lower repayment cap?
We have actually quite more of a mix where we can pay it back quicker, but then of course then we will have a smaller cap for us to repay them, or otherwise we can spread it out for a continuous range of years, but then of course it will be much more expensive for us.
Yep. No warrants or covenants.
No. And
no personal guarantees.
No.
That's good. So you'd recommend round 2 then?
Yeah, I will recommend round 2 all the time, and especially in the early stage, because capital or money is really expensive then. So this is a really good way of us to take the first steps together with them, and we have also negotiated in our terms that we could, if we want to, continue to borrow on our ARR.
Yeah. They'll kind of do a refi or recap as you grow.
Exactly.
That's great. Put this all on a timeline for me. When did you launch the company? What year?
2015. We were go-to-market ready.
Okay. And what are you at today in terms of total team?
We are 7 people, and we have 2 part-times as well.
That's great. So 7 folks, and is everyone in Sweden or Stockholm, or are you guys spread out?
No, everyone is in Sweden. We have 1 guy in Poland, but we are quite a multi-ethnical team, though.
That's that's good. And then besides this financing, are you bootstrapped or have you raised?
Bootstrapped.
That's great. Okay. And did you the funding that you have now available to you? I mean, did you do like $100,000 or $500,000? How much did you raise there?
We took in, now I just need to do this in dollar, approximately $120,000 we just took in. And that's just for cover we need more R&D. That's where we're focused right now.
Got it. So you'll spend that on what, like developers and things?
Yeah, developers and also some UI, UX.
Interesting. Talk to me about growth. If you're at about 56 grand today per month or about 700 grand in AR, where were you exactly a year ago in October of 2017?
We were approximately half the size of that. So we have a year-over-year growth of around 100%. And that's what we need to keep going forward. And as a natural next step, we need to, of course, leave the Nordics and go into UK and Germany.
Yep. Interesting. So again, growth is great this early. You mentioned you have natural pricing accelerators, which are driving expansion revenue. Walk me through those signing up a new customer. How do you find one of these new customers? What's the sales cycle typically? We have
around, our sales cycle is around 45 up to 120 days, actually, depending on which of their modules. Some of the modules are more complex than others. We need more C-level manager to take the decision, actually. But approximately between 45 and 120 days. We work with direct sales. We educate our market quite a lot. So it's quite expensive right now. I think we have a cost of customer acquisition around $5,000. But now we are really increasing the marketing money that we didn't actually earlier did. So we will try to lower that to approximately $2,500. That's the target for our cost of customer acquisition next year.
Okay, but $5,000 right now, and if people are paying $1,250 per month, I mean, you're getting paid back still though in like 4 or 5 months, right?
Yeah. And of course we're getting 12-month payment in advance all the time. So it's easy for us to still scale, but we need to lower that. And we're focusing quite a lot now on email marketing. We're doing account-based marketing, and we're also going into more in depth with the SEO in different markets. And we haven't been really good at that. And I think Sweden as a SaaS market, we are not really as good as you are over there in the US with the marketing and lowering the cost of customer acquisition.
You might be giving us too much credit, Sebastian. We'll see. All right, let's wrap up with the famous 5. Number 1, what's your favorite business book?
Dale Carnegie, How to Win Friends and Influence People.
Number 2, is there a CEO or founder that you really follow or like?
I actually like a company in Sweden called Fort Knox. I don't know the CEO, but Fort Knox has an amazing go-to-market strategy, which I really is fond of.
Which is what?
They have actually teamed up with the big fours, PwC, Deloitte, EY, and what's the last one?
PwC, Deloitte, McKinsey.
Yeah, but they have all the auditors, and they are selling their product for the bookkeeping, and I think that's amazing. So they put in partnership from the beginning.
It's a little channel strategy there. That's good. Number 3, what's your favorite online tool for building your business?
Upsales, our CRM marketing automation tool, and also we do the invoice from there. So that's the heart of our business right now.
Upsales.com.
Yeah, okay. Upsales.se. That's a Swedish company as well.
Very good. I like that. Lots of stuff happening in Sweden. That's good.
Yeah.
All right, number 4. How many hours of sleep do you get every night?
I think around 6.
Okay, that's good. And what's your situation? Married, single, kiddos?
Single.
Okay, no kids running around?
No,
not that you know of?
Right no.
All right.
It's coming up.
All right, Sebastian. And how old are you?
I'm 36.
36. Last question. What do you wish your 20-year-old self knew?
Oh, what should I say? Something really cliche, but just trust the process and continue to grind and believe in what you're doing.
Guys, homemaker.io, founded in 2015, today doing about, call it 45-ish, 56 grand per month. That's up year over year, about 100%. You know, they're doing about 25, 30 grand per month back in October of 2017. Bootstrapped, except a new revenue-based financing vehicle they took from Round 2 Capital based out of Austria. They've got about 45 customers, which are developers. That's who he's serving. They pay about 15 grand per year with natural accelerators year over year, which is driving net revenue retention north of 115, 116%. Team of 7 people based in Sweden building this out, about to double down on research and development. Sebastian, thank you for taking us to the top.
Thank you, Nathan.